Why is the single most attacked asset in the entire cryptocurrency space breaking all-time highs right now? Think about it. We have delistings from every major centralized exchange, explicit bans in multiple national jurisdictions, and an active IRS bounty on its head. Yet, while the rest of the market is chopping sideways or bleeding out, Monero is trading near $600. Most people look at a regulatory ban and sell. But the smart money looks at the price action after the ban and realizes something terrifying for the regulators. The control is gone. We are seeing a massive decoupling event. Bitcoin is struggling to hold momentum, but Monero just shattered a multi-year resistance structure. Is this a capital flight to safety amidst institutional chaos? Or is it one final trap before the hammer drops? I'm looking at a specific setup on the 2-week chart that suggests we are about to see a move that defies all conventional logic. Right now, Monero is trading around $600 and $650. If you have been watching the charts for the last month, you know this is not normal behavior. We are up over 50% in the last 30 days alone, pushing a market cap of $11 billion. This is significant because it is happening in a vacuum of liquidity. Most of the retail on-ramps are gone. You cannot just open your Coinbase app and buy this. The people buying right now are jumping through hoops to get exposure, which means the conviction level is incredibly high. We are seeing volume of nearly $500 million in 24 hours. That is $500 million flowing into a coin that the establishment says you should not touch. It tells me that the market is valuing privacy at a premium we haven't seen since 2017. But before you go market buying this breakout, you need to understand the fundamental triggers driving this, because there is a specific misunderstanding about the news coming out of Dubai that is fueling this fire. And if you misinterpret it, you might end up becoming exit liquidity. Let's clear up the noise regarding Dubai. You probably saw the headlines screaming that Dubai has banned privacy tokens. This kind of news usually sends a coin spiraling down 20%. Instead, Monero rallied. Why? Because as Vinny Barbosa and Agura pointed out, the headlines were functionally inaccurate. The ban applies strictly to the Dubai International Financial Center and regulated entities within that specific hub. It does not criminalize peer-to-peer usage or individual ownership. The market realized that this was a nothing burger for the actual protocol, and the price squeezed the shorts who bet on the headline. This resilience is what Jaylene calls anti-fragility. Monero hits new all-time highs after exchange delistings, after constant bad press, and after blacklists. It proves that the network value is completely detached from centralized permission. And there is a bigger macro backdrop here. Dan, also known as Robustus, noted a fascinating correlation. Monero and Zcash started ramping aggressively exactly when news broke about the Department of Justice attacking the Federal Reserve. When you see institutional infighting and government instability, capital flees to non-state private money. It is not a coincidence. On top of the geopolitical narrative, the tech is actually getting better. The Monero team just announced full-chain membership proofs, or FCMP++. Without getting too bogged down in the engineering, this strengthens the anonymity set. In a transparent chain like Bitcoin, everyone sees everything. Monero is selective transparency. This update allows for features like outgoing view keys, which basically blinds chain analysis firms even further. So you have a fundamental trifecta. The technology is upgrading, the regulatory bans are proving ineffective, and the macro environment is driving demand for seizure-resistant cash. Now, let's look at XMR on the 2-week chart, because this is where the thesis gets validated or invalidated. The first thing that jumps out is this massive ascending triangle pattern that has been forming since 2021. We had a ceiling, a flat top resistance, and a series of higher lows. Price action just broke this structure to the upside. When you break a multi-year consolidation pattern like this, the expansion tends to be violent. We are currently trading well above all the key moving averages, the 10, 21, 55, 100, and the 200 green simple moving average. The trend is undeniably bullish. Let's talk Fibonacci levels. I'm anchoring my fibs from the May 2021 high of roughly $500 down to the cycle lows around $97. We have cleared the previous all-time high resistance, and the next major magnetic level is the 1618 extension. That sits right at $750. That is my immediate target for this breakout leg. However, I need to be very clear about my personal strategy here. I'm not buying at $600. The risk-to-reward ratio for a fresh entry here is poor. We are chasing a vertical move. The Heikin-Ashi RSI on the 2-week timeframe is extremely oversold, pointing upside, which usually signals strong momentum, but it also screams risk. If you are buying here, you are hoping for a greater fool to buy it higher. My load zone, the green box on my chart, is between $350 and $450. This aligns with the 786 fib level at $415. If we get another retracement back to test the breakout of the ascending triangle, that is where I would look to deploy capital. It's the classic breakout and retest strategy. Now, for those of you who already hold Monero, congratulations. The path of least resistance is higher. My take profit targets are laddered. The first target is that 1618 level at $750. If we clear that, we enter price discovery mode. I have secondary targets at $1,150, $1,500, and a final cycle extension target at $1,800. We have to talk about the invalidation. I have a hard stop loss placed at $340. A weekly candle close below $340 would mean the breakout has failed and we have fallen back into the range. At that point, the bullish thesis is dead for the medium term. If that level breaks, perhaps if Bitcoin crashes below $80,000, I would actually flip my bias. I would look to open a hedge short with very low leverage, maybe 1 or 2x, targeting the $250 region, or even the 382 fib at roughly $190. Volume profile analysis shows the point of control is way down at $150. I don't think we are going back there, but it acts as a distant magnet. We need to see volume consolidate at these higher levels to build a new floor. Right now, the volume is supporting the move, but we need to see it sustain. So, here's the synthesis. The fundamentals tell us that privacy is in high demand and regulations are failing to suppress price. The technicals show a confirmed breakout of a 5-year structure. Cycle theory is also on our side. The Bitcoin astrology account noted that privacy coins historically top after Bitcoin. If Bitcoin has already put in a local top, capital rotates. We are seeing a cup and handle breakout on the macro. This usually implies a final 4 to 8 week parabolic run. If you are out of the trade, you have to be patient. Do not FOMO into a green candle that's already up 50% in a month. Wait for the retest of the breakout level around $450. If you are in the trade, start trailing your stop losses. As we hit $750, move your stop to your entry. As we hit $1,100, move your stop to $750. Lock in profits on the way up, because when privacy coins correct, they correct fast and hard. Monero is proving to be the cockroach of crypto. It simply refuses to die. It is currently outperforming Bitcoin on a 5-year ROI basis, up 235% versus Bitcoin's 175%. That's a data point that most maximalists ignore. The market is signaling a decoupling, and for the next few weeks, Monero looks like one of the strongest plays on the board. For those of you looking for a place to trade this volatility, since it is delisted from many places, I use MEXC. They still list XMR and have high liquidity. I have a link in the pinned comment below that gives you access to their deposit bonuses. It is a great way to support the channel while you trade, but please use leverage responsibly. If you want to track this setup in real time, I post my daily chart updates in my free Telegram group. The link is also in the pinned comment. Don't forget to like and subscribe if you want more data-driven analysis like this. Thanks for watching Never Financial Advice, and I'll see you in the next one.